Alright, good morning, TC Nation. Mark Warren Trader here. Excuse me. Sorry, I wanted to go over just a recap real quick on the Apple's earnings trade. So, a couple of things why I like Tastyworks. What you're looking at in front of you here is the downloadable version. Tastyworks has two versions, okay? So let me try and see if I can. Alright. Here's the downloadable version, which is great. It's the fastest one. It's their flagship program, and it has things that are not quite done yet, but almost done yet. But for example, I'm going to slide this back out so you guys can see. Okay, hold on one second. If I can grab this, I want to make the table bigger. So I'm going to go like this, just real quick. All right, so what I like about the table version, okay, so up here, there's curve and table. In the downloadable version, here's what you folks are used to, but they haven't done everything yet. It looks a little bit different than the old Dole version, so depending how familiar you are. But their table version, as you can see here, oh, whoops, let me clear that. In their table version, if you go here, and I'll collapse this, you'll see all the different expirations, okay? And here's the implied volatility for each expiration, and here's the expected move. So let's say you wanted to trade Apple earnings, and on this column based on the expiration it would have shown plus or minus, and I believe for this one it was like plus or minus $4.30, and the actual move was only $2. So let me show you here is the web version. So when I go to table in the web version, it doesn't look the same. You know what I mean? It's missing a bunch of information. It'll show the expirations over here, and it'll show implied volatility, but it doesn't have everything. Yet it'll still have this expected move, like based on today. Here's the shaded area is the expected move of Apple. Okay, based on just this expiration date right here. Okay, I can collapse this if I double click it, but okay, so based on this current implied volatility, that's the expected move. Okay, so and I could do this one right here. If I click on that, here's the expected move. Here's the implied volatility, and here's the expected move. But in the curve view, right, you can see right here, based on, well, we didn't pick one yet, but here's the expected move right here. And remember yesterday, let me go to my Thinkorswim charts. Now, as you can see, I'll zoom in. Earnings came out, it dropped, right? And after hours, and here's what happened. It pretty much stayed roughly. It still was a $2 drop, okay? But it stayed within the $4 expected move. So if you did a golden gecko, you would have made money, of course. And here's what I really want to show you folks is the IV rank. And I'm going to change this real quick so we can see it real quick, a lot easier. Oh, whoops, wrong one. That's IV rank level. Whoops, here it is. Okay, so remember what I told you? Look what happened. So today, I'll zoom in. Okay, so see how, oh wait, maybe not. Okay, see how IV rank was climbing, right? And here's earnings right here, and look what happened. The very next day after earnings came out after hours, and today the market opened, and look what happened to IV rank. So this is where you're gonna make all your money. That's why a lot of people do earnings trade, but you got to be careful. Now look, here's the best part. Even if you only sold a put or half a golden gecko, meaning you would bet, even if you bet that Apple was going to go higher, you were wrong, right? And you still made money. Okay, you still made money. It was within, and it stayed within the expected move. How do you know what the expected move is? Well, in Tastyworks, you'll see it's this shaded area based on the expiration you pick. So for example, if I pick, I don't know, we'll do a golden gecko again. Here we go. We'll do this, right? And it'll be closest to 45 days, right? But I do have the weekly check because I want to see all the different ones. So watch. So here's closest to 45 days. Okay, and I'll zoom out real quick. There you go. So here's the June 16th expiration. It's the normal expiration, right? Because there's nothing here. And here's the expected move. If you want to zoom in, you can see where the expected move is. If you click on table view and then you zoom, you scroll down here and here's the expected move right here between the 140 and the, you see the shaded area? So I like the curve area. I'm just kind of spoiled that way. So I like to see, and then you can actually be, okay, well, if I'm betting those stay in between, then you can move the strikes. There you go, right? And you already know the percentages. A golden gecko is 84%. If you want to be more aggressive, you can bring it in like this. You know, but there's no strike. See, there's no strike right above it. So it'll be kind of hard. So these are the first strikes right outside the expected move. Okay, if you want to be aggressive. And then, of course, to make it synthetic, you want to keep these around 2%. And there you go. You'll collect $126. You have a 6-8 chance of probably of making money. You have a 84% chance of collecting 50% of your max profit. Now, but for earnings play, you'd want to, this would be a lot closer, meaning you'd want to have it expire right after earnings so that you could, you know, theoretically make more money. But as you can see, this is a good example of the arithmetic working, meaning according to that implied volatility, it stayed within the range. All right, now here's what it looks like on the downloadable platform. As you can see here, here's the expected move based on the current implied volatility right here. All right, so this is what I mean about IV rank collapsing and how you can, let's say, even if I betted, even if I made a bet that Apple would go higher, I lost, right? I mean, this meaning I was wrong that way, but I still made money. That's what I love about trading this way. If you want to see what's up for earnings, go to your platform right here, go to your grid, and you can actually sort, oh, sorry, close this, and then open up your grid, and you can do basically anything. You can do liquidity, you can do the tasty trade default list, whatever the market, you can do liquidity, hit filter, and just do earnings. And what has earnings in the next, I don't know, 70 days, and then hit, you want good liquidity, and then sort by, look, earnings in 5 days. See all this? This is great. All right, hope that helps. I'll talk to you guys later. Let me make some trades and let me see what's going on first. And if anything pops up, oh wait, hold on. Let's just real quick look. Load everything. Here we go. And now range, I'll zoom. Here's SPY. Nice red dot. Good, still red. Hopefully this turns over and you'll see us. Oh, that looks good. See, this is red. That's good. This is still red. That's good. Yep, it's still below, so hopefully this turns over and IV rank will climb. Ooh, I'm looking for a nice sell-off, hopefully during the summer. Let's look at IWM, which is a favorite. Yep, nice. Okay, looking good. If anything pops up, I'll let you guys know. Have a great day.